Investor Intelligence provides general information only. You should consider seeking independent advice to see how this information relates to your unique circumstances. Please refer to the terms and conditions available at investorintelligence.com.au for more.
Welcome to this week's episode of Investor Intelligence, the weekly podcast on all things investment, hosted by me, Jacob Kearns. To end the year strong, we're going to do a bit of a recap on the property market in 2023 and some things to expect moving forward in 2024. We've had an increase in the cash rate from 3.1% to 4.35% this year alone, with many increases last year as well in 2022. We're also experiencing a housing shortage across Australia, which is making it difficult for renters to find rental accommodation. Luke, how are you feeling about 2024 and what are some things that you're thinking about?
Well, that's a very interesting question. Look, I'm always optimistic about property markets for the year ahead. As you know, I've been investing for the last 23 years or so. And look, every year brings its own challenges. And obviously finishing 2023, a lot of investors might feel a little bit bruised and battered with interest rates and various other things. There's also been a lot of change to legislation about, rent increases only being allowed once a year and higher maintenance standards, especially in states like WA, New South Wales and Queensland, following Victoria's lead from 2 years ago. And all of that has really changed, I guess, the requirements for a rental provider or a landlord to look after their property and in turn look after their tenant, making sure that the properties are safe, they're compliant. These are sort of no-brainer things, but they are now legislation that they need to be a lot safer, and things like fire alarms and smoke detectors and things being interconnected, all of these standards are sort of increasing. Great for renters, but ultimately that does feed back into higher rents. And of course, with interest rates increasing over the last 18 months, that has resulted in a lot of issues with tenants because rents have actually increased and quite substantial increases in some cases, especially with governments getting involved. Wanting to cap rent increases at once a year doesn't necessarily fix the problem. And I've noticed that a lot of tenants are now copping huge increases instead of small increments over every 6-month increase, which was there before. They're now copping $50, $100, even $150 or $200 in one big hit once a year, rather than getting a $10 or $15 increase every 6 months. So I think the governments were trying to help tenants in that case, but once again, they failed to do that. But look, I think 2024, we're going to see some stabilising of interest rates, possibly coming down in the second half of the year a little bit, which will bring more confidence back in. I think that we're really in a good place now with, I guess, all of the issues and the flow-on effects of building and construction after COVID that have now been, I guess, stabilised throughout 2023. 2022 was very much an uncertain year because there was still a bit of the COVID hangover still happening and building prices were still increasing and fuel costs. And of course, we saw inflation going through the roof over the last 12 months as well. So I think a lot of that uncertainty that we've seen through 2023 will start fading away in the second half of next year into 2024. But I still think that going into the first part of the new year, that we're not going to see an instant shift. It's certainly not going to be it's a new year, everything's different. I think we're going to still see, I guess, a little bit of a flow-on effect of what we're seeing through this year.
Yeah, you're right. Interest rates have been a big topic of conversation, and a lot of the big four banks are predicting that they'll start to fall between, I think, August and the end of next year. Luke, if you refer to your crystal ball for a minute, what does this do to property prices?
Well, my crystal ball is telling me that property prices are going to continue to increase. Look, a lot of investors have actually moved out of the market over the last 12 months with interest rates increasing. A lot of people have sold or decided to put their properties on the market. And again, that's put further pressure on rents as more properties come off the rental market. As interest rates start stabilising and the media sentiment starts changing, obviously there's been a lot of talk around interest rates, and it does scare people. A lot of the sentiment in the market for investors has been around the cost of living, the cost of interest rates, and of course rents going up. And a lot of people have been a bit scared to get into the market. What it means for property prices is that once these things start fading away and newspapers and media outlets are all reporting interest rates are dropping and property prices set to grow and forecasted to grow again, all of these headlines will shift relatively quickly. And I think what that'll start seeing is by spring 2024, there'll be another so-called property boom that has never really gone away. But it's what the media will report that people will follow.
Yeah, and it feels like this cycle, if you want to call it that, has sort of gone on for a bit over two years with interest rates, and it's really interesting how quick sentiment can change.
It is, and look, a lot of people are following the media, and media does have a huge impact on people's decision-making process. The reality for me, though, is I've been investing throughout 2020. I actually bought more property in 2020 in the middle of COVID in any single year than I have in any other year in the last 23 years. That wasn't deliberate. That's just how things worked out. There were some amazing opportunities in 2020. In 2020, there's a few too many 20s there. And then throughout 2021 as well. So it has been since 2020 and now going into 2024, the last 3 years really has been a roller coaster, both as an investor and as a tenant, but also the general public with the inflation costs and the big supermarkets and costs of shopping going up every single week, it seems. So I think we will start seeing a bit of stabilisation there, but there's still some external factors. We've got obviously there's wars going on, and there's a federal election happening in the US. Again, it seems like we just finished the last one in 2020, and so next year there's an election in the US. So there's going to be a few bits of uncertainty throughout the year, and obviously the situation in Ukraine is still going on, sadly, and these external factors are going to influence Australia to an extent, and also will sort of affect the sentiment for investors. But for me, the year ahead looks bright because there is always opportunities in any market if you've got a plan and you're ready to take advantage of those opportunities when they arise.
Yeah, and when you think about the supply and demand of property specifically, as our population grows, as you said, there's always going to be demand for certain areas. So your outlook for 2024 is quite positive. Where would you say is the best place to invest in 2024?
Great question. Look, I think the answer for me is going to be different to everybody else. The best place to invest is where you can afford and where it fits into your long-term plan and strategy. So there are going to be opportunities in every state. There's people that live in the Northern Territory that will only invest in the Northern Territory. There's people in Perth that will only invest in Perth. For me as an investor, I've got opportunities. There's going to be opportunities in every state and every territory. However, the opportunities that are good for me aren't necessarily going to be good for you or any of our members. So look, there's going to be some amazing opportunities in Queensland, amazing opportunities in Victoria and Western Australia. These are the states that are predominantly attracting interstate migration, also have really good infrastructure spending. So if I was going to be giving a very high level summary, I would say that those three states are the ones to watch for 2024. It doesn't mean that there isn't opportunities in other states and territories, but those three are the ones that have got really good fundamentals for the year ahead.
Another thing I want to discuss with you, Luke, is that in 2019, APRA made banks include a serviceability buffer of at least 2.5% above the actual interest rate, which then increased to 3% in 2021. They started to regulate this when the cash rate was low and borrowing money was cheaper. Now that interest rates have increased, do you think there's a chance that they'll remove this buffer?
Well, look, I think the APRA requirements are going to change from time to time. I think to a certain extent, when external factors, governments, APRA, banks bring these rules in place, it is challenging for people to sort of look at their serviceability and their borrowing capacities and so forth. But when we look at these external factors being, placed on us as investors, I just think about the fact that we are in a very safe country. as far as, a lot of, we've just returned from South America, and we spent 3 weeks over there. And I tell you, everything's very different over there. It's a beautiful country, amazing place to be. But everything here really is cotton wool board. We're very safe. We've got rules for everything. We are very much a nanny state. But also, these things are the reasons why investing in property here in Australia works so well. Because there are so many layers of protection that are placed on us as investors, for our protection, which really underpins the value of property long term. So whether they change these requirements of 2.5% or 3%, or whether they bring it back to 2%, it really doesn't change things a great deal. It will probably relax a little bit more, but as you've rightly pointed out, it is an external factor. It's not within our control. A lot of people say, well, when they relax that, then I might go back into the market again, or when rates come back down. Why would you wait for an external factor?
Yeah.
I think that ultimately, when things do stabilise, when inflation starts reducing, when interest rates start reducing, and things get back to what we would probably call a normal market, which is, who knows what normal is anymore, then that will change and people's borrowing capacities will go back up again, and that restriction will ease. But it really does underpin why property in Australia is such a fantastic investment, because if you think about it, banks are really putting in, or commercial lenders of some sort, are putting in 70, 80 or 90% of the purchase price into the property. So you as an investor, you're going out there and you're putting maybe 10, 20 or 30% of your own money in. The banks are putting the rest in. So whenever the bank's lending money on property for investment, or even for owner-occupier, they're looking at two things. You might be looking at the property and whether it's a good investment, and so you should be. The banks are looking at the property, but they're also looking at you. So the banks are doing an extra layer of due diligence and research on not just the property, but also you. So the banks do their research and they get a valuation done and they make sure the property is worth what you're paying for it. But also they're doing their research on you. So you might be doing your research on the property and decide it's a good idea. The banks might agree that it's a good idea. But if they don't think that you can afford the property, they're not going to put 70 or 80 or 90% of the money into the property. So this is where, we have so many layers of protection here. If the banks are willing to lend 80 or 90% or more of the property to you, the loan to value ratio to you, then it probably checks out. So this is why all these protections are in place. So there's so many layers of protections here that, whether they change this or not, it's probably not going to mean a huge change for actual investors.
Yeah, no, that's interesting. Any other advice as we move into 2024 for investors or for anyone in general?
Look, I say this to everyone every year, is make sure now is a fantastic time, end of 2023, going into 2024. If you're listening to this at the start of 2024, now is a fantastic time to, clean the slate from what happened in the last year. Work out what worked for you and what didn't work for you. Did you achieve the goals that you wanted to achieve? Did you not achieve them? What happened? Really have a bit of time, allocate some time for yourself. Take yourself out for lunch, or take yourself out for breakfast with a notepad. Write down what worked and what didn't work for you, what your fears are, what your concerns are. Write down your goals for the year ahead and put some numbers next to it. Put the dream, the date, and the dollars. Work out why you're doing what you're doing. Why do you get up and go to work every day? And I think having that time to reflect on the year that's just gone and look forward to the year ahead is really a good process to go through every single year. I do it personally. I spend a few hours at the start of the year going through what I'm focusing on for the year ahead, but also it allows you just to consciously think about what you're doing, whether it's working for you and whether you need to change something.
Yeah, no, that's a really great idea. Might start a new tradition.
Well, it's definitely worth doing, and I think if you don't do it, like they say, if you fail to plan, you plan to fail.
No, I'm certainly excited for 2024. I hope you are as well, Luke, and all our listeners, of course, as well. Thanks for coming on, and see you all next year.
Thanks, Jacob.
If you found this episode or any of our episodes helpful, please make sure to share and leave a rating to help us reach more people on their investing journeys. And of course, subscribe to be notified when new episodes drop. Make sure to follow the podcast on Instagram at Investor Intelligence Podcast. You can find links to our other socials in the show notes, including a link to the Property Mentors weekly blog. If you're ready to get your property portfolio in shape for financial freedom, check out Luke's latest book, Property Fit. You can get yourself a copy at www.propertyfitbook.com.au.